Americans are poorer. The level of protectionism globally is significantly higher than that of the United States, and the trade deficit with the EU and with China is absolutely unsustainable. Added to that, stronger dollar and stronger Bitcoin, we are going to talk about what is going on with the Trump trade. Number one, the US may have been in recession since 2022. We have talked a number of times in this channel about the risk of what was already a private sector recession. It was very obvious. We saw that GDI had a huge discrepancy with GDP. We saw that consumer confidence and labor force participation rate added to the employment to population rate all were below the 2019 levels. We saw that investment was weakening. We saw that the earnings and sales of the small caps focused in the United States were not growing at all between 2021 and 2024. All of those were signals of a very weak US economy. However, the most important factor here was the impact of inflation in the economy. And what we can see here is what the so-called Keynesians say is victory on inflation. Look at the victory on inflation. Oh my God, between 2021 and 2024, an enormous increase. This is the accumulated inflation index, which shows that inflation is not just not falling, it's persistent and remains stubbornly elevated. However, a recent study by E.J. Anthony and Dr. Peterson Onge has shown that the United States may have been in recession since 2022 because the inflation level calculated in CPI was underestimated. Inflation was underestimated, and therefore GDP, real GDP, was overestimated, and real disposable income as well. Let's go to the next graph, which shows a little bit about this. What they have done is an analysis that is quite similar to the one that we have done in this channel a few times, which is to understand the real impact on families and businesses of the increase in non-replaceable goods and services. And what we have seen for many, many years, and we have written and talked about it here, is that it was pretty obvious that the economy was much weaker than what the government said all the time, that the headline GDP, jobs and real disposable income figures were much weaker. And what they have done is to make an analysis of what the change from nominal to real has been, and there find that inflation has been significantly underestimated in the CPI and in the GDP deflator. It means that in periods of elevated inflation, the headline figures massively show a completely different picture than what citizens perceive on a daily basis. And that is part of the conclusion. Let's go to the next graph, which is showing it in a very visible way. This is disposable personal income. And what we can see is something that I find incredibly interesting, which is if you look at the nominal disposable income, what we can see is that it's gone higher. Okay, elevated inflation. Real official disposable income has risen not a lot, and actually that is even with the official data showing that it was a very weak economy regardless. But with the adjusted inflation figures, it is actually in negative territory. Let's go to the next graph, which is even more evident. Now, in this, what we can see is the chained GDP figures. Now, this is what I find more interesting about this incredible study. Okay, historically, if you use the adjusted inflation figures that they have used, the adjusted and the real official number were actually pretty close. Look at the enormous gap created between 2021 to 2024 between the real GDP and the adjusted GDP, which is actually showing a recession. is interesting, no? Because that huge gap comes precisely with the Build Back Better, the Inflation Reduction Act, which was actually the Inflation Perpetuation Act, the enormous government spending and deficit spending monetized and creating further inflation, and therefore making citizens poorer. And what this report shows is what we have been saying for a very prolonged period of time, which is that the conclusions of the study are so evident is that the reality of the economy, it coincides exactly with what the study shows and what people perceive about the economy. For years, many economists have been trying to justify why GDI was lower than GDP, why the unemployment to population rate ratio and the labor force participation ratio was lower than in 2019, why real disposable income was not as strong as expected, why the figures of consumer confidence, of small business confidence, of sales and earnings of the Russell 2000 were not as good as expected. They were trying to adjust those disaggregated figures to the allegedly robust and solid figure of real GDP and real disposable income published officially. Well, what ended up happening is that these two were the ones that were overstated because inflation was underestimated, and the ones that were published in a disaggregated way were the ones that were more realistic, and it's been proven by the results of the election. The United States is probably in a real recession, and as we have said numerous times, in a private sector recession. Let's go to the next graph, which goes into further details about what is going on with the Trump trade and the concept of tariffs and the risk of protectionism. The number one thing that we need to understand is that since COVID-19, the United States is one of the countries that has imposed the least number of restrictive trade policies in the world. It's been massively overtaken by East Asia and Pacific, by South Asia, and certainly by Western Europe and Middle East and North Africa. Protectionism is not a concept that has been brought by Trump. Actually, protectionism has been something that has been gradually and increasingly imposed in a more aggressive way by most economies and not necessarily by the United States. Let's go to the next graph, which puts in a much more interesting way the tariff barriers, not just the ones since COVID-19, but tariff barriers in general. And what we can see, according to The Economist, is that the United States is one of the least protectionist economies in the world, even with the so-called trade war of the Trump administration, of the first Trump administration. Not just one of the freest trade economies, but compared with the ones at the bottom, India, Mexico, Brazil, South Korea, Russia, South Africa, China, it's incredible to see what an enormous difference there is, i.e., it seems that the world wants free trade in the United States, with the United States, but not internally. And therefore, it makes sense that what we see these days, read the book, No Trade is Free Trade. If you read that book, what you can see is that actually what we are seeing is a massive increase in protectionism from other countries, and that tariffs are a way to negotiate an improvement in those conditions for the United States. Let's go to the next graph, which shows us the first element of negotiation, China. Trump is going to try to negotiate with China that this absolutely atrocious level of trade deficit is reduced. And if not, at least that the revenues coming from that trade deficit are going to be a benefit for the United States fiscal position, which is quite needed. And what we can see is that the trade deficit has been enormous. And in the last 4 years, it has actually increased. So one of the things that needs to be done is to rebalance the level of trade. Tariffs may not be the best way to combat protectionism, but they're one way of combating the enormous advance of protectionism and trade barriers implemented by other countries. And why? Because all those countries, the only country in which, the only large economy with which China has an enormous trade surplus is the United States. So it makes sense to rebalance that situation, and maybe the only possibility is to put tariffs to offset the trade barriers imposed by China itself. Let's go to the Euro area and the European Union. The European Union trade deficit, trade surplus with the United States is phenomenal, and it's been growing and growing and growing without control to a level that is simply unsustainable. Therefore, this needs negotiation. They're partners. Partners cannot have enormous protectionism disguised under environmental and under regulatory umbrellas and then say that they want free trade with the United States. What needs to be is some quid pro quo in all these sectors. Look, from agriculture, from aircraft, from organic chemicals, from motor vehicles, etc., pharmaceuticals, all those things need to be rebalanced. And maybe the threat of tariffs will be the way to get governments to negotiate. Maybe that is one of the ways, but certainly it's going to be either of an improvement in trade, in this graph courtesy of Bloomberg, or higher tariffs that mean higher revenues and higher demand for US dollars, which brings us to the Trump trade effects on currency. Let's go to the next graph. In this graph, what we can see is the enormous bounce in the US dollar, quite the opposite of what many of sell-side analysts expected. They thought that the dollar would weaken with Donald Trump. Actually, it's been the opposite. Dollar is rising. Furthermore, the gap between the DXY, which is mostly the euro and the yen, relative to the US dollar in trade-weighted index, has widened. That means that the US dollar is strengthening relative to most of its currencies. Tariffs mean more demand for dollar. Higher growth coming from the private sector means more productive growth and less inflation. And certainly lower government spending means lower inflation and lower supply of US treasuries, i.e. an improvement in the overall situation. If that works, it'll be phenomenal for all the world. And no, emerging economies don't suffer from a strong dollar. They get higher revenues in US dollars from their exports, and they also get stronger balance sheet of the central bank. The only ones that suffer are the ones that want to continue with twin deficits in order to impoverish their citizens and blame others. Let's go to the final graph, which shows us what has happened with Bitcoin. We may have the first Treasury Secretary that is going to defend Bitcoin and that is going to defend crypto assets and the increased use of Bitcoin in the economy. Furthermore, we may see the first time in which the Federal Reserve adds Bitcoin to the balance sheet. All of that is making a tremendous change on the sentiment on Bitcoin. It's normal that you see a stronger dollar and a stronger Bitcoin, because what people are assuming from the Trump trade is that there will be a rebalancing of the trade deficits, an improvement in the economy coming from a private sector, bottom-up driven supply side strengthening of the private sector economy and the productive economy. Lower taxes, cutting excessive expenditure, reducing the deficit, reducing the level of increasing debt, and certainly a stronger dollar and a stronger Bitcoin if the Federal Reserve starts adding Bitcoin to its balance sheet. All of those things are going to be positive, and certainly bringing the real economy back to prosperity instead of a headline strength that actually showed a reality weakness. Keep defending freedom. Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.